Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today, we're going to talk about one of the most ambitious price projections ever made by a major figure in the financial market. Can Bitcoin really reach $250,000 in the coming years? This question has gained strength in recent weeks, especially after surprising statements from Peter Schiff, an Austrian economist and longtime critic of digital gold. Although he is well known for his bearish stance on Bitcoin, many bullish analysts and investors are using his own arguments to reinforce the opposite thesis. If Bitcoin is a bet against the traditional monetary system, and that could open the door to levels once considered unthinkable, like $250,000 per unit, then the worse the US fiscal situation becomes, the more valuable Bitcoin will be. Bitcoin is moving further away from mere speculation and is increasingly being seen as a global store of value, an inflation hedge, and a strategic financial instrument. Let's start with the technical and macroeconomic fundamentals supporting this idea. Additionally, the April halving further reduced the daily issuance of new Bitcoins, making the scarcity curve even steeper. Its fixed supply of 21 million units is immutable. As more institutions and even governments adopt the asset as part of their balance sheets, demand pressure tends to rise. In 2024, we witnessed the historic approval of spot ETFs in the United States, which brought billions of dollars in direct institutional inflows into the crypto market. He added, "If Bitcoin were a country, it would have the lowest inflation rate in the world." If we consider valuation models based on MVRV-Z-Score, stock-to-flow, and other indicators, the $250,000 mark doesn't seem so far-fetched, especially when looking at the long-term effects of global monetary policies and the continuous expansion of regulated infrastructure. If this view is correct, Bitcoin can easily surpass the $250,000 level as part of a new global financial reality, even if the path is volatile and full of obstacles. According to Raoul, Bitcoin is the ultimate hedge against modern state mismanagement. He projects that if the Federal Reserve continues expanding its balance sheet and maintains negative real interest rates, BTC could surpass $150,000 in 2025 and hit $250,000 by mid-2026, 4 years. Saylor has argued that Bitcoin is the best alternative for capital preservation in a world of mismanaged fiat currencies. One of the major figures publicly discussing this scenario is Michael Saylor, founder of MicroStrategy, the company leading the corporate race for Bitcoin, accumulation with over 700,000 BTC already on its balance sheet. "The problem isn't Bitcoin's current price," he recently stated during an international blockchain conference, but rather the constant devaluation of the US dollar and the unchecked printing of money by central banks and capital flow data from exchange-traded funds, showing that institutional investors are migrating to Bitcoin in search of real wealth protection. Moreover, on-chain data shows that long-term holders are accumulating aggressively, while exchanges report consistent outflows, signaling clear hodling intentions. That reinforces the narrative that as governments continue to issue trillions in public debt, the only truly scarce asset will be rewarded with appreciation. If the model holds true, Bitcoin could follow a trajectory similar to gold, art, or even rare earth metals used in technology, where scarcity drives prices exponentially higher. This model predicts Bitcoin's price based on its relative scarcity and emission rate. However, despite these barriers, Bitcoin has proven to be resilient. Countries like El Salvador, Argentina, and even some US states are beginning to integrate Bitcoin into local monetary and fiscal systems. Another respected expert in the space, Raoul Pal, former Goldman Sachs manager and founder of Real Vision, has also spoken out about this possibility. He argues that we are currently living through a cycle of hidden inflation and dollar devaluation, unlike anything before, and that Bitcoin is the only asset capable of offering real protection against the erosion of purchasing power. Therefore, the movement toward $250,000 is not just technical or macroeconomic, it is also geopolitical and social. Every political mistake, every new budget deficit, every QE policy adds fuel to Bitcoin's fire. Pal bases his analysis on macroeconomic metrics such as the rise in M2. It's important to remember that while these projections may seem extreme, They are backed by mathematical models and historical patterns from other scarce commodities. The stock-to-flow model, developed by Plambay, remains one of the most cited by technical analysts and macro strategists. With the 2024 halving, the number of new Bitcoins entering the market dropped to around 900 BTC per day, meaning selling pressure from miners decreased dramatically. This imbalance between supply and demand historically leads to appreciation. Finally, we must consider the geopolitical and regulatory landscape, which could either accelerate or delay the arrival at this level. In addition, tech giants like BlackRock, Fidelity, and ARK Invest are launching increasingly sophisticated products, such as staking ETFs and passive income funds tied to BTC, which facilitates institutional capital inflows. On the flip side, nations like China and India still maintain certain regulatory resistance, which could create international friction. If emerging markets continue facing hyperinflation and monetary instability, demand for a decentralized currency will only grow. Stay tuned here on the channel for all updates, exclusive analysis, and full coverage of everything happening in the crypto universe. If you enjoyed this video, don't forget to like, share, and subscribe to receive notifications whenever we publish new content about Bitcoin, altcoins, DeFi, and everything going on in the world of decentralized finance.